Site. Nagaraj Annaiah, the one-stop shop for all real estate needs. Call 408-805-4653 or log on to nagarajhomes.com.
What's up, Bay Area? Welcome back to the Real Estate Show. I'm your host, Nagaraj Annaiah. And What's up, Bay Area? Welcome back to the Real Estate Show. I'm your host, Nagaraj Annaiah, and today's episode is big because we have a mortgage consultant, April L, with us right when the mortgage world is exploding with the new updates. From the 50-year mortgage headlines to jumbo lending changes to what buyers should be doing right now. I'm going to ask April every question that makes a difference. Hello, April. Welcome back to the show.
Thank you, Nagaraj.
Hello, listeners. I'm live on YouTube, also live on Bolly 92.3. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. April, there was a recently the Donald Trump administration via Federal Housing Financing Agency, right, FHFA, is discussing and making available a 50-year fixed mortgage for home buyers. What do you think about that?
That could be a good product that helps people, especially the first-time home buyers, get into homes. It's going to depend on what the interest rate is, though. So, that one, the 50-year fix could really make a difference. We had a 40-year fixed that was out that didn't become very popular because it wasn't priced really well. But if the 50-year fixed is priced right, it really is going to help, especially first-time home buyers, get into their residence.
So let's talk about the scenario 30 years versus 50 years. Why it's so important, right? How does it matter also? Because your monthly payments would be lower, right? Even the rates might be a little bit higher end, but your overall monthly payments might be more affordable. Is that the one reason why the 50 year might be a lot better? Or because 50 years almost half the monthly payments would reduce?
Yes. So 50 years. So if you do a 30-year fixed, you have 360 payments. If you do a 50-year fixed, it's over 600 payments. So the interest rate is probably going to be higher, but amortized over 600 months versus 360 months, it could really make a difference.
Yeah, I think, and even the interest rates also matters. Even if it is even interest or a little bit 0.25, 0.5 higher than 30 years also, the monthly payments would be too low. So that's a good option, I feel, if they
Yeah,
could make it
I
happen.
think so too. And I think especially, like I said, first-time home buyers, especially because then later, as maybe they accumulate more wealth and more income, then they can turn around and refinance it to shorter terms if they want to do so, or they can just decide to make additional principal reductions and shorten the loan that way if they wish to do so.
Yeah, listeners, myself, Realtor Nagaraj Annaiah, and I'm joined with April L, the mortgage consultant, and we're talking on anything on the Bay Area real estate and the mortgage. Do give us a call. Our studio line numbers are 877-265-5992. So as you said, right, April, like on a median price US home, like roughly around 450, if you're taking all over the US, right, it's around 6 point, like switching to 30 years to 50 years might almost save them roughly around 300 to $400 or maybe a more also for a 400K. But in kind of in a Bay Area, almost 1,000 to $1,500 over the life of the loan, like means every month they'll be saving it.
Yeah, it could be. I'm kind of actually doing math as we speak, just for fun. So if we're doing, let's say, $1 million loan,
Correct.
at 6%, 30-year fixed, payments about almost $6,000. Let's say we go up to even 7%. Let's just say a 50-year fixed at 7%. Well, actually, let's do 6. It'd probably be more like 6.5.
Yeah.
So that would lower payments to about about $400 a month, about $5,600. So
That's a good basically reducing it because the longer loan means equity accumulates very slower, right? For example, after 10 years, you would have far less principal pay down versus a traditional 30 year, but always in the Bay Area, appreciation is the difference, right?
mhm.
So that is where you can start accumulating on the appreciations instead of you wait for 3, 4 years to reduce the rates. But this might makes a difference for them.
In California, we get that appreciation. We may have our natural cycles, but I tell you, my family, we didn't make money in the stock market. My family purchased property, both commercial and residential, and they did quite well. I was, very proud of my grandfather coming here and doing well in California.
Yeah, that's really nice of it because look at today we had put in one offer in San Jose. It's a 95124 zip code, 1,500 square footage built up area, roughly around 7,000 square footage lot. People keep saying the market going down. This house is complete flipper. Flip
Mhm.
house. I mean to say there's no kitchen, there's no everything they've toned down. Do you believe it? 33 offers came in.
Yeah.
33 offers. People are still doubting, should I buy? Market will drop, market will crash. People say it's an AI bubble. But Bay Area bubble will never stop. It's not a bubble because it's a fact.
Even in 2008, before you were here, it didn't really have an issue in the Bay Area. It stays very stable. It's very desirable. People need to live there to work, and they want to live in certain areas. And no, you just did not see what other areas had even in that drastic time. So I don't expect your area. It might stabilize some for a
Yeah.
period of time, but overall drop, I don't believe we're going to see that.
I think you well put together. It will stabilize, right? That is where when it is little bit slowing down, maybe you should make believe yourself and just start jumping in and buying it out, right? Like then again, it will somewhere it will start catching up and going up again.
I mean, that's the thing. As long as you're not looking at it like you're going to flip it, like I need to flip it and this, but you're going to hold on to it like you would, some other stocks, mutual funds, and things like that. It goes through the cycles.
Yeah.
So even if it goes down temporarily, it comes back up on the other side. So as long as you're going to hold it for a while, you're going to find that it's not as risky.
Yeah, that's true. Listeners, myself, Realtor Nagaraj Annaiah, and I'm live with April Hell, the mortgage consultant, the senior mortgage consultant, and we are talking more of the Bay Area real estate. If you have any questions, do give us a call. We are live on YouTube and live on Bolly 92.3. Our studio line number is 877 Bolly 92, 877 Bolly 92. The next important question, April, is how are the rates doing right now? Let's talk about for 30 years, ARM rates, how it is doing.
Yeah, actually, we've been doing quite well. The 6% today for 30-year fixed was 0 points. Our ARM actually has stayed the same, which for quite a few weeks now, I think even maybe months, at 5.375%. So bond market's really been pretty constant, going up and down a little bit, but I think pretty much this is where we're going to stay probably till the end of the year, is my guess.
Like 5.375 for the arms is really good rates right now, correct? That's for a jumbo. Jumbo, that's what we're talking
It
about,
is.
right? I think let's
Absolutely.
now talk about there's a lot of confusion always for the people on the jumbo versus confirming, right? I think because this is very, very important to understand now. A lot of people say, I want to buy a house under a 1 million, even if they're qualified to buy for 1.2.
Mhm.
Why is always better to buy a 1.2 million versus 1 million? Why do you think so? What is your view on that?
Well, sometimes, I mean, jumbo rates can be priced better
Correct.
than Fannie Mae rates. And it's because, I mean, the Fannie Mae has a guaranteed second market, but their rates are kind of set a little bit more based on what you're going to sell Fannie Mae and Freddie Mac, what you're going to sell the loans to them for. So they're a little bit more if you're going to resell loans. So a lot of times they can be a little bit higher sometimes than jumbo.
Yeah, so for example, because right now the confirming are right now close to what 6.375. This listeners, like we're talking about jumbo versus confirming, and why sometimes 1.2 million homes are better than a 1 million homes when you're purchasing it, because interest rates are higher for the confirming loans, correct? So that is why. For example, in Santa Clara County, the confirming loan limits are close to 1.1, right? April around
They
roughly.
are 1.2 now. And then
Wow.
they're already going. I have to look at my cheat sheet because I
But
can't keep track.
yeah,
I used to know this
roughly,
on the top of my head,
roughly
but
around. Yeah, yeah.
yeah, but it's going up slightly for next year. We'll start seeing those being implemented now. So
Yeah, so if you're buying in Santa Clara County, maybe more than 1.2 million is little bit better because your interest rates are almost 5.375. But if you're doing for confirming loan limits, then its interest rates are 6.375 or 6.5, depending again on your credit score and other stuffs, correct?
That is correct.
So maybe if you're buying 1.1 and 1.25, the monthly payments might be the same.
That's true. Yeah, it just depends on a number of different factors for sure.
So that's why listeners, like when you're buying the house, you need to make sure what is the jumbo versus confirming. That's very important to understand because you might simply might be compromising and buying the house and later you realize, oh, almost I'm paying higher interest rates. Then you realize that was the reason because of the confirming and jumbo loan limits.
That is
So,
correct.
yeah. So right now it's a 6.375 or 6.5 for the confirming for the.
So some of them, yeah, they've been closer to 6.375% to
Mhm.
6.5%. They've been kind of fluctuating day to day.
Nice. Okay, listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to April Elf, the mortgage consultant. If you have any questions, do give us a call. Our studio line numbers are 877-265-5992, 877-265-5992. Any questions on the Bay Area real estate or a mortgage, you're more than welcome to call for us. So one more important thing to understand is April is on the affordability and risks, right? Because payment burdens remains high, right? Like if somebody comes in with a lower credit scores, like let's say, right, like what do they do? Like should be keep waiting it or like should if they have if they qualify, should they buy it? What is your suggestion on it?
Well, it depends. If there is a property that they can afford,
Mm-hmm.
it let's say they can qualify for it, they could always purchase the home now, clean up their
Mm-hmm.
credit and do a refi. But definitely, I always look at my client's credit when I'm running it to see,
Yeah.
hey, is there something you can optimize?
Okay.
Because if you optimize it, then you're going to get potentially a better interest rate. But if they ultimately want to purchase the home now, they still have some stuff that they're going to pay off some debt later, then they do all that. And then when their credit score is better, then look at refinancing it.
Okay. So what about the refinance opportunities? Right now, if somebody has bought a house beginning of this year where the rates were high, with rates softening, there may be a refinance opportunities for owners who took high rate loans earlier, right? What do you suggest on this? And what can they be cautious like because of stricter criteria right now?
I think as long as you're going to get usually about a 0.5% or more in
Mhm.
interest rate, it usually makes sense to refinance. And obviously, as long as everything has stayed the same with you, if the rate
Mhm.
goes down, the payment it goes down. So you should qualify for that loan if you qualified purchasing at a higher interest rate.
It's only reason you might have lost the job, then the circumstances have changed, then it might affect them.
Absolutely. Yeah.
They need to watch out for it. So, and one more thing, as you said, over the refinance rates right now going on.
Is so ours are the same.
Mhm.
It's the same as regular, but Fannie Mae and Freddie Mac rates for those that investors that sell to Fannie Mae and Freddie Mac, they would have loan level price adjustments that could be a little higher.
Okay. So, but almost the interest rates for the refinance, if somebody had bought it for a 6%, is the right time to do it because rates are right now is 5.375.
Yeah, anytime
Jumbo. Yeah.
somebody's going to get at least a 0.5%, usually that makes sense to me.
Yeah, listeners, if you want to refinance and would like to know your options, also you can give us a call. Our studio line numbers are 877 Bolly 92, 877-265-5992. And recently you were helping out one first time home buyers, right? Like basically, the first time home buyers, what is the minimum down payment they need, right? Like there's always a confusion. Sometimes they need a 10% or a 5 or like 20% down. But what are the minimum options available for the first time home buyers?
So the minimum down payment would be, it depends on the loan amount. I
Mhm.
say 3%. That is a little difficult in the Bay Area because of the housing prices, but 3%. But your loan can only go up to, I think it's 7 something, 8 something
Mhm.
now. But 3.5% is a typical one, or 5% even.
Okay. 3% is a minimum down payment you can buy it, and if it's more of a jumbo loan, then they need a minimum 10%.
If it goes to, yeah, what we call a high balance conforming, which goes over the minimum of, give me a second for my cheat sheet, 806, 500. So if it's above 806, 500, then it's what we call a high balance conforming loan. And that one, you would need either a 5% down payment on conforming or 3.5% for FHA.
Yeah, that's good to know. I think as little as 10% down, you can buy a house roughly around 10% down, correct? So you can buy a house around the Bay Area right now.
Correct.
So instead of waiting for you to accumulate for a 20% down, you can always do it as little as 10% down.
I think it's a good idea to, I personally wouldn't wait if it makes sense for me, for my family. I would purchase with less. If, some scenarios have mortgage insurance, some do not. Depending on what that is, the values usually are going to increase over years. So you're going to gain some equity that way, and you're going to be able to refinance or do something that might be even better later on. But I personally wouldn't wait because I didn't have 20% down, because you're kind of chasing after something and it's changes and changes and changes.
Okay. And when very important thing to know, right? When is good approach to do is it a market gimmick to do a buy down, or is it really worth buying a buy downs for reducing your rates?
Okay, so there's two different type of buy downs. The straight buy downs, which are like you'll hear a 2-1 buy down, which
Yeah.
the first year it's 2% lower, second year it's 1% lower, and third year it's those literally what you pay for those is exactly what it's going to save you
Mhm.
in your mortgage payment. So the only time that those ones make sense is when the seller, so sometimes a builder gives a big credit that they need
Mhm.
to use. That's the only time that one is going to make sense, because
Correct.
legitimately you are paying exactly what you're saving, so it doesn't make sense.
Mhm.
Sometimes on the points, so that type of buy down where you're paying points
Mhm.
could make sense depending on how long you're going to hold the loan or own the property.
Okay, what is this 3-2-1 buy down also? This is
So the
LTV.
first year, it's 3% lower than the note rate. Second year, it's 2% lower than the note rate. Third year, it's 1% lower than the note rate. And then finally in year 4, it's the note rate. But literally the costs that they calculate to pay for that buy down is exactly what the monthly savings is. So the only time that that makes sense is if you're getting a credit from someone where you have to use it. So a lot of times they'll give these big $20,000 credits or something, use it or lose it.
Uh-huh.
You need to, use it somehow. So that really makes sense.
Yeah, that's good to know. I think when you're buying for a new construction, if the builders are giving a credit, then always go for it, because that makes sense also, right? Like, because then you can reduce your rates, because first year is 2% reducing it. It's a worth, right? But I,
Absolutely.
no, but again, most of the lenders who they use it, I think they're already their rates are higher, right? Sometimes you need to check on that also. Is it really worth?
Yeah, definitely check with the lender to make sure you're using all of it. I mean, we're pretty protective of our clients to make sure, because it has to be used towards closing costs and prepaids, or they lose it and it goes back to the builder. So we're very sensitive to, of course, use every penny that we can to get them the lowest rate and payments.
Correct. Listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to April L, and we're discussing anything about the Bay Area real estate. If you have any questions, do give us a call. Our studio line numbers are 877-265-5992, 877-265-5992. And one more important thing to understand there is sometimes the employment trends, right? There both the ways are happening. There's a tech layoffs keep happening. Our the lenders, especially treating a job gaps, contract work, RSUs, and stock-based income today.
So with job gaps, that's fine as long as it's explainable. So we just have to explain anything over 30 or 60 days. But if they get the next job, then that's fine. The problem can be if a large portion of your income is RSU income and you switch jobs, because you probably are not going to be able to use that for qualification because you have to at least receive it for a year and you have to have those in the future. So if you're just starting a job, that's difficult to use that qualifying income.
Yeah, that's why always when you're doing a job change, then you should make sure you're getting your updated pre-approvals, right?
Yes, and if you can, buy your house first and then change your job if you have an option.
Yeah, listeners, I would like to talk about one more important thing is the Bay Area Real Estate Connect, the Bay Area's #1 real estate and wealth conference happening on December 13th. That's happening on 10 a.m. to 2:30 p.m. at ICC Milpitas. This is not just another real estate. I think April Eld also was a part of this event from last 2 years, right, April?
That's correct. It's
Yeah, and
amazing.
she'll be here also this year. Now, this is the fourth year in a row. Real Estate Connect has become the most trusted and sold out real estate and wealth building conference in the Bay Area. Every year, it brings a dynamic community of realtors, like investors, lenders. Like April will be there in person. You can talk to her and find out what are the options and other stuffs on the mortgage related also. A lot of entrepreneurs will be part of this. All are committed to learning, growing, and achieving a financial freedom through a real estate. How to register for it? Go to nagarajhomes.com to register for this. Is a free event, but you should register to be part of that event. And only few tickets are free, so that's why register before it's sold out. Out like what you learn is a lot of things to learn from the real estate, right, April? You also
Yeah,
have to.
absolutely. I love talking to the other people that are there because I learned so much from them.
Yeah, it's especially like tax strategies, advanced tax strategies, entity structuring, and depreciation methods. There's a lot to learn on the tax itself and the mortgage itself. We think the mortgage is simple, right, April? But there's so many things to learn on the mortgage.
Absolutely.
And especially if you're an investor, how do you make sure? Like one more important, since we're talking about the investment, somebody is looking to buy an investment properties. What are the minimum down payment they need if it's not in a commercial? And how is your rates for that?
So most of those are 20% down, but interest rates are only about a 0.5% higher
Oh,
than
not bad.
than regular. So for the risk, I mean, I think that's pretty reasonable.
Yeah, it's not bad, right? Like it's just a 20% down, and you can buy an investment properties. That's really, especially some of the areas where the declining markets in the East Bay and all. Maybe it's better to go with that, buying an investment properties, give it for a rent.
Absolutely. Yeah, some of those areas are great and they can still get good rents. Rents have been increasing, so they can get good rental income from them.
Yeah, listeners, if you want to register for the Real Estate Connect before the tickets are sold out, go to nagarajhomes.com to register it. This is, as I said in the beginning, what you will gain is proven systems to achieve a financial freedom through a real estate, direct access to various top lenders, CPAs, contractors, and attorney. And one more important thing is clear roadmap to build, protect, and scale your investments. So many things to learn from the Real Estate Connect. So go to nagarajhomes.com to register for a Real Estate Connect. April, if somebody wants to reach out on the mortgage related, what's the best way to contact you?
They can reach me on my cell phone, 949-306-8100.
Yeah, and if April is not available, you can always reach out to me so that I can connect with her. The best way to connect with me is go to nagarajhomes.com, click on a WhatsApp icon, or you can give me a call at 858-880-4577. I have an open house this weekend, April. Like it's in Dublin. It's a wonderful house, 3 bed, 2 bath, priced at 979. Where do
Mm.
you get such a, and it's one more important is it's a pet friendly where you can have your dogs and cats also. I see the cat behind you.
Yes, yes. Yeah,
That's
there
very,
should be two around here somewhere. Oh, there's one right there.
it's very difficult to get a community with a pet friendly nowadays.
Yes, yes.
So it's I have an open house there. If you want to come and meet me in Dublin, do come. It's in Glengarry Drive, and more information is available at nagarajhomes.com. Thank you so much for the listeners, and thank you so much, April, also for joining in today.
Thank you, Nagaraj.
Thank you. Thanks.